This is Rod Kusin and Spoon for Risk. This is a retake of the July 26th video after the market closed, just to eliminate some of the audio problems that we had in the live video that we recorded earlier today. We were calling for a short based on a pattern. The pattern was a red day. It was a red day down. Red days are identified by the best entry in the first 30 minutes, best exit in the last. That is precisely what occurred today. Now, we were also looking for a target. Our initial target was at about 74. 74 based upon the area right in here, which was low volume. And as you can see, we had low volume in the overnight market right in there, right at about 74. So that was our initial expectation. But we also looked at the low volume area here, which was at 73, and we also looked at the composite. And the composite was of particular interest because when we pulled back to the 21st, this area, this low area here, we noticed an area of significant repair right in there. Now that was lower than where we actually went today, but I'm fairly confident that we will get there. Nevertheless, the directional bands showed that around 72-ish would have been a fairly good target, particularly since the low of the morning was at 72, and that was really right where this directional band was headed. So we were looking at 72 as really the final target, unless, of course, we break through that and we go into this area of repair. We took our video live shortly before the noon hour, where we had continued to see a fair amount of retracement going on right in here, right above the upper value area shown here. And we continued to climb back up to around 77 before we finally began that more significant drop after the noon hour, which in fact does take place in here and finishes our pattern at 1450 precisely. Now, when we looked at the premium was also giving us a very clear picture of the direction. Now, this is really designed for the purpose of looking at the trend. Now, when we looked at our first low here, there was a move up on the premium just slightly. Not enough to really tell us what the trend was. But once we came to this point, even though we're at a higher low, we've got a lower low here, that's our trend. So into the noon hour, we're looking at a short. Now that short does materialize, and we get a big bar down right in there. That needed to be tested. When we finally did test that level, we came into a lower low. We had a lower low here and a naked bar. Nevertheless, this thing took right, of course this is at 1 o'clock, you know what happens at 1. Anyway, we come right back up here and we test 77.25. Finally, we get divergent right here, and we come back down, and we have not tested the low. Now, we come back to this low, but it has not tested this low. So that's not our target. We've got to get below that, at or below that level, and read the premium again. And when we do, and we come back here, we see the premium drops all the way into negative 384, even a lower low. And a lower low still here at negative 386. That's still a naked bar. Yet we bounce back up and right back up into 77 in the after the close. We used a live video and looked at market, we looked at order flow during the course of all of this, but that's really beside the point. This was our video. The call was down, the call was short, the call was red day down, low in the last half hour. That's precisely what took place. That brought us to the end of our video, and that's what we called, and that's exactly what happened. But all the same, it was a little tough after 1 o'clock because of all of the activity right in here that moved the market back up to that 77 area, and is as we speak right back to where we are right now. All the same, the call was correct. I'm Rod Kusin, Spooman for Risk.